Hey everyone, Couch Investor back to another video for today. If you missed the block video, I already explained a little bit why we're now in this type of setup. We'll be like this for another week or so. I'll try and make it as good as I can. If there is some issues with the sound or something else, just let me know down in the comments below. And if you've missed the block video, you can check that out. It's going to be in the top right corner. Now, with regards to Mercadolibre, to be honest, to be expected, right? Another blowout quarter from the company, beat on earnings per share by a lot, beat on revenue as well. Basically, nothing bad can happen here when you're holding Mercadolibre. Currently, of course, since it had a very strong year, all things considered, in 2022, which means that in 2023, the year-over-year comparisons will be more difficult than other companies that had a weak 2022 and could have a better 2023 with easier year-over-year comparisons. So that will maybe be a bit of the same story for Mercadolibre, but on the other side. But of course, if things do get better overall in Latin America, but the overall economy worldwide, then it will obviously benefit Mercadolibre as well. And since the company is extremely strong fundamentally, of course, this could be a huge catalyst for the short, but also the long term. So before I jump into the financial metrics and then the margins, if you like this type of videos, leave it a thumbs up, subscribe if you have not, and if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Alright, so starting off here with Mercadolibre, so the marketplace, we can see that GMV continues to grow overall. We can see a huge increase here in Argentina for this quarter. Now, in the other segment, they did say that inside the other segment, you have Chile, the largest market in the segment, delivered another sequential improvement in growth, albeit still negative, with items sold back into positive territory. As you can see right here, we're now at 2% year-over-year growth when it comes to items sold. Overall, unique buyers reach its highest ever level of 46 million in Q4. That's up 13% year-over-year, driven by growth in Brazil and Mexico. Then when it comes to Mercado Envios, so the logistics side of the business, we can see here continued market network penetration now at 94%. But yes, it's down 4 percentage points here from 55% to 51% when it comes to same day plus next day delivery. But they did give us some explanation here. So same day and next day deliveries fell slightly. And this was due to higher than expected volumes and external disruptions during peak season. Of course, this is also a quarter with the World Cup. So, well, this was a huge catalyst for the company. And you could see this being a bit of a negative, but it's actually a positive because they do say it's due to higher than expected volume. So obviously, popularity of the platform is growing. Then when it comes to managed network penetration by country, Argentina 93, Brazil 93, Mexico 97%, Chile 95%, and then Colombia is at 91% here. So it might not have peaked yet, but it's still pretty high. Then when it comes to Mercado Pago, the fintech side of the company, the payment side of the company, so I'm going to touch on the unique fintech active users here and wallet payers. They say here that unique fintech active users reach almost 44 million in the quarter, a 27% year-over-year increase, driven by higher engagement in all digital account use cases in all key markets, particularly Argentina and Mexico. Now, when it comes to Mercado Crédito, the credit side of the business, this has seen also some improvements there. And this segment basically is the more risky segment overall. But it's nice to see that we do get here some improvements. They say here general performance, the portfolio and originations were broadly stable in Q4 this year to Q3 in the same year, with a decline in originations in Brazil offset by growth in Mexico and Argentina. They continue by saying that the IMAL, so interest margin after losses, rose to 48.3%, driven by adjustments in our APRs and lower provisioning than in Q3 2022 as a result of lower risk and better asset quality. So overall, net revenue on FX neutral basis grew 56% year over year to just over $3 billion. When you look at operating margin, that's up over 1,000 basis points year over year. And remember, we said when we touched on the Mercado Envios side, higher volumes in that season, so you can clearly see some effects here. So commerce net revenue reached almost $1.7 billion in the quarter, helped by stronger monetization. And then Mercado Pagos, so fintech net revenue surpassed $1.3 billion, driven by strong TPV growth and higher take rate year over year. You can see here, it has obviously grown 3 digits throughout the year. Now we're at 93% year over year growth over 91% same quarter last year. So this is a very, very fast growing segment. Then when it comes to the take rate, we can see some improvements here in the commerce one. So they say here that take rate expansion was driven by ads penetration. When it comes to credit and repricing, that is driving higher year-over-year monetization in the fintech take rate. Of course, it is down a little bit here, as you can see, quarter over quarter. But overall, gross profit margin has expanded 882 basis points. And this is basically why I'm always saying that third-party seller services for Amazon is much better than first-party one, because you can clearly see it here. They say, first of all, they touch on the dilution of shipping and payments processing costs, and then lower first-party sales with margin improvements. Very, very important. Then, as we've seen before, operating margin expansion by over 1,000 basis points. They basically tell us here why. So driven by low COGS, G&A dilution, and more efficient marketing spend, but partially offset by product development headcount, which you can clearly see right here. And then, of course, net income margin that expanded as well, 766 basis points, largely due to efficiencies in COGS and income tax, partially offset by higher OPEX and FX losses. Also remember, this is a Latin American company right now in Brazil, in Argentina, in other countries surrounding that continent. Things are not that great economically, but also politically. So them making sure that they produce the goods each and every quarter, execution here has to be perfect, and it has been just that. So again, I want to remind everyone that this is really a great company. You can rarely find these types of investments. And last couple of things here. So this quarter, well, they increased total cash by $835 million, with leverage ratios consistently improving throughout 2022. As you can see right here, higher profitability in Q4 and continuous improvement in working capital. So cash from operations here, pretty good. But if you compare 2021 to 2022, you can see that 2022 ended $285 million below 2021, and that's including the November 2021 equity raise. So to conclude, it says here on the slide, thank you, but actually I want to thank management, because management has really been executing flawlessly, or as close as perfection as can be, especially in the current weird political situation there in Latin America, especially in Brazil, but also Argentina and the countries that they're operating there, Latin America, in Mexico. Economically, things are not always the same as in Europe or as in the United States. So to me, it's really a real example that they are setting right there. This is how you run a successful company. So really nothing else to add here. We're going to follow this company around for a long, long time. It's in my top 5 holding in my portfolio, and I'm very, very happy that I've grown my position over time when the stock was down quite a lot. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.